Welcome back, everybody, to Catapult Your Business. We are here to help entrepreneurs get, one question answered to help scale and grow their business to the next level. Thank you so much for joining us. I've got a special guest. Before I introduce that guest, they've brought a really great question, as always, and I think this is going to be pertinent for a lot of owners who are listening in today. And that question is this: how do I increase staffing? How do I bring in a larger level of capacity while still maintaining margins? Is that even possible? We're going to go deeper. We're going to talk about it. If you're curious about how can you scale and maintain margin, this might be the conversation for you as it pertains to bringing a lot of staffing into the organization for growth, that classic human capital need that most businesses want to solve. But let me introduce you to our guest, a talented client of ours, also a partner and vendor of ours. So kind of a double whammy here. So Rick Whittington with Whittington Consulting, one of the top 15% partners as a HubSpot solutions partner. Unbelievable guy. Rick, welcome to the call.
Hey, thanks for having me, Casey.
Glad to have you here. Thanks for, I know I speak on behalf of Brad. Thanks for letting us kind of be in your camp to help support your growth and your business. I think that's been going since 2018, right? We've been doing this for 4 or 5 years together.
Yeah.
It's been a bit. And then in addition, I know Cultivate, because I work with the marketing department so closely. We're working hand in hand with you, and you're helping us with all of our HubSpot needs. And so that's been a great partnership over the last couple of years. So thank you for that as well. So we're kind of double dipping here together. But why don't you tell everybody listening in, just real quick, kind of what's the differentiator, or what makes up the Whittington Consulting Group to become the top 15% HubSpot partner in the world?
Yeah, Casey. Well, thanks for asking. So basically, we're a digital marketing agency. We only do digital, so we only help companies. And what we talk about is we help them become the Library of Congress for their industry. And so what that does when they publish common questions, customer-focused questions and answers to questions and information about the challenges that their customers are having, it attracts business to their company. And so we help them from everything from their website to their content marketing. And then on the sales side, we're helping generate those leads. And a lot of times companies need a good way to handle those leads and make sure things don't fall through the cracks. So we help them set up HubSpot and use HubSpot effectively.
Yeah, which if you've ever been on HubSpot, or you're a company listening in and you're on HubSpot, if you don't have a good partner, I guarantee you are missing out on massive ROI of getting it to do what you need it to do. It's just a very powerful, powerful software, as most know if they've dabbled in it. Well, Rick, we're glad to have you. Thanks for bringing such a great question. You've obviously, had a successful trek here, building your business to what you have so far. Congrats on that journey thus far. But I think you're trying to figure out, how do you keep scaling and how do you keep growing while protecting that margin? And more importantly, right, it's like you lose work or revenue might fall off, that dreaded attrition of revenue kind of kicks. It's like, how do you manage that when you're trying to staff up for growth, but then you have that attrition kick? And we're going to kind of dive into that. But let me start with you. Like, why is this important to you? Besides, you want to make more money. Why is this important to solve?
Yeah, it's important because we want a stable business, right? So, we have these revenue cycles where things are, feast and famine, and I'm sure every business goes through that. But, I want security not only for myself and my family, but also for our employees and for our vendors that we work with and for everyone else too. I want that same security. I want to be able to provide the best benefits. I feel like we do a pretty good job of that right now, but it always could be better, right? And so if we can figure out some of these challenges, it's going to be better for everyone.
What do you think goes into this, right? Like, if you were to go give yourself your own advice, Rick, like what do you think is the number one thing that is currently holding you back? Like, what's the biggest barrier that holds you back from being able to maintain margin while you bring on staff? Is it the loss of work, or is it just the inability to predict the revenue that's coming? Like, isolate the root for me.
Yeah. So, the predictability of the revenue, I can already estimate cash flow well in advance. So I can look at almost the entire year. So we're recording this in May. Right. I can look at all the way through at least October, November, and see what cash flow.
You've got a 5 to 6 month runway.
Absolutely. Yeah. I've got a good runway, and I've got a really solid picture of that at least 3 months in advance. Okay. But there are times where, like for the first half of this year, we've signed a lot of business. At the end of last year, we lost a pretty big client. And it was just a company that was too big, and we really couldn't serve their every need. And so they decided to go to a company that was a much bigger agency. And so the issue we have is we've got some revenue loss. And then this year we've been rebuilding that revenue. And so as we do that, we have capacity challenges. So there are times where we have people on the team that are not fully utilized. So it's costing us profit. And we've got times where everyone is stretched thin because we have too much work. And so being able to look well into the future, and I think balance what comes in and what goes out is probably our biggest challenge.
I got to tell you a story. We're going to start with a story. We're going to do it a little differently today. So some that have followed me and have an idea of my background, I actually started in home service industry. It was exterior painting to be exact. And one of the things that I did when I first got started in franchising is if I had a painter on a bench because work didn't come through or we didn't have enough revenue, because a lot of times painting, we were booking 2 to 4 weeks out. That was our runway, right? Very high, fast turn. It was a risky venture per se. Now people are booking years in advance because no one can find a painter to come to their house on time. The industry changed a lot, over the last 15 years. But this is really relative, Rick, because for you, right? Because what was really interesting is we would actually start to have our painters go knock on doors and hang flyers whenever there was no work. So they still had to produce the hours, and we would distribute. And gosh, was it a game changer. The other thing that we did too is we had allocations where we would only book 30 hours, 35 hours. That's what we considered full time. And then we would allow them to make more money to go above and beyond. They weren't on hourly pay, actually. They were on set structured of cash. Some of our employees were. And so they would be set up in a way where they would actually have the opportunity to earn more. So if the business was performing, they were performing. But the expectation of lifestyle got set around the actual number of hours that we would consider to be capacity, if that makes sense. And I think a lot of companies don't take that risk fast enough and they hold off. And so obviously, you're probably seeing where I'm connecting the dots already. It's like, what is actually full-time hours? And should you actually reduce that and then create upside with some type of compensation model that will allow you to buffer that a little bit more than you are? Even if you captured 5 hours less per person and you ran that math on the financial output, you'd be shocked how much of a difference that'll make to the bottom line margin at scale. So that's one element to think of. The second is that how does Whittington Consulting become the client when there is a gap in productivity, in capacity? And do you have tried and true methods that generate a ton of business quickly? Because if you haven't invested in that, marketing engine that they can go do, that are tactics that anybody could go and implement, well, will you be able to sustain the growth? And I have this concept that, for right or for wrong, and especially in the service industry, everyone in the organization should be responsible for a revenue goal. Every single one. Even, yes, revenue production, but even revenue sales. They should be responsible for something. Can they bring in a client or two by client referrals? What can they do? If you get everybody focused on a revenue goal and you create the pool of incentive appropriately, you will generally find this becomes less of a problem. Because what I actually find happens is team members don't want to be responsible to go prospect and market for that amount of time when they lose the client, because they view it as a consequence. So what happens? They naturally do a better job of keeping the client. Now, it's not always in their control, but that is one piece that I say. Now, from what I just shared with you, and that's just one element I want to talk about, then I'm going to go into another kind of alley or lane that goes into this. What do you like about what I said? What do you hate? Because this is really where there's a bit more of like a preference of how to run the business.
Yeah. So, I mean, what I would tell you is that the people that are in place right now probably would have an aversion to going and doing sales, quote unquote sales, right? So if I gave them some sort of a structure to do that, that might be, an acceptable.
You got to build a playbook, and they don't have to sell it. They just have to do the prospecting work to open up more lead opportunities for you to close them down.
Yeah. And I'll tell you, we have a 100% reliable way of getting new business for ourselves. But because we're an inbound marketing agency, it takes time, right? So it could take 6 months to get that engine ramped up. It could take 8 months. It could take 3 months. It just depends on.
You need other short-term tactics, though, that you need to implement into that playbook.
Yeah, we need something. I mean, as a marketing company, obviously we know all the things that at our disposal, and we know what works and what doesn't work for our business. But what we know works takes longer. So there's really been nothing that, at the snap of a finger we can employ to get business today. And I think that's been a little bit of a challenge for us.
Are you getting the advice you need for your business from this episode? Do you want to get more than just one question answered and have it customized to you and your business? Well, Cultivate Advisors works one-on-one with thousands of business owners every day. Let them help you scale your business today. Don't just listen to this episode. Take action and go to cultivateadvisors.com to see which advisor you get matched with and receive a free 2-hour business assessment on how you could scale your business to the next level. Act now at cultivateadvisors.com.
Well, two options, right? If I could push back on that, one would be, and again, everybody listening in, like, think through this. You probably have this like kind of locked persona, right? You do this for a living. So you have this locked persona. You have this ideal product package and offering that you've coupled together that where you deliver your best, right? The reality is you may need to implement some type of project-based opportunities that you can get really fast that aren't necessarily the exact persona, but there's an ongoing conversation of what percentage of revenue is that's helping afloat the growing pains of working through, predictability of revenue and attrition that falls out of revenue generation. And using that as a tool and stop using it as your business, start using it as a tool to cash flow the growth versus that's our business, right? And so don't tell anybody you do that portion. It's just that's one segment you almost build a new product line out of that are quick while we wait for the bigger projects to come in that will actually be the proper persona. And I'll give you an example. Again, I hate to go back to the painting, but it's like we used to do gutter cleaning. We used to do window washing. We used to do power washing in addition when we were slow. That's what we would go get. We hated those projects. It was like you're there for 2 or 3 hours. It was hard to make margin. You know what? It wasn't about making margin. It was actually about covering the cost and not depleting profitable margin that we had earned from the projects that we wanted to work on.
Yeah, and I'll tell you, we have a few of those things too. So we do have some of those things, especially on the website side of the business, where we can go in and we can get some, additional income. And it's not great for us. It's not a great margin producer, but it helps the client and it helps us at the same time. The other thing we've thought about in the past is a value laddering system where you have, we might come in with a HubSpot portal review. So, for, I don't know, $1,500, we'll come in and we'll look at your HubSpot portal. We'll give you some suggestions for improvement.
Do an audit, do a cleanup, whatever it might be.
Exactly. Yeah. And that could potentially turn into that big engagement that we want.
Yeah, and every business is different, right? So that I don't want to go too detailed down that path, but I think ultimately you're thinking the right way. And my biggest piece of advice before I go down this other side I want to go down is have a playbook and get everybody tied to revenue and start, if you're not already, get insanely transparent with your team of what's expected. And again, create those buffers. Don't hold capacity way up high. Actually lower it back down just a slightly bit. Raise your prices just slightly to make the numbers work, to give you that buffer, that gap. Because again, what I generally find with owners and businesses is they've come up to the brim on what capacity is for it to be at the level they need. And they actually need to reset the expectation. And the win for the client is they get a more, work-life balance environment, but then they get paid additionally when they go above and beyond that. And if you can get them into that, so they're sharing that risk with you, oh gosh, as the owner, you can really protect margins of the business while also most of the time having a really strong incentive above and beyond that even some of your competitors probably aren't offering. So it can be semantics. It might work out to the same amount of money, but it sets the structure the right way where you're also not at risk of letting people go and hindering their livelihood because there's an up and down in the business. Now, I got to go a completely different path for a moment. Growth is super expensive, and this is just my firm belief. I actually don't believe it is very easy to maintain margin through growth.
I would totally agree with that. We grew at 43% last year, which was our best year ever. And what I'll tell you is it was difficult to maintain the same margins. Our margins were strong, but they were not quite what they were the year before that.
Well, and what it is, and again, you're of sound mind here, but you get what's called these financial cliffs, right? So what most people don't understand is when you go to grow and scale a company until you've done it, when you go through that process and you start to move at that level of speed, you start to get these cliffs that you have to overcome. And until you get all the way past it, you don't catch back the margin, and the margin will be bigger than where you were prior, right? It's maybe not on a percentage basis, but dollar amount much larger than where you were most likely. The problem is until you get over that next hurdle of overhead, you don't realize it. So you shrink your margin through that period. And that's why I would just say growth is expensive. I've talked about this in several different, other catapults. It's a very hot topic right now because I think people come to us and just think, oh, Cultivate, help us grow and scale. Okay, great. Where are we? How's this going to work? What's the numbers? What's the cash say? What's the actual outputs of this look like? And so the reason why I'm going down this path is here's what I have found. You can either choose to run your business off a growth engine or a capacity engine. I haven't found many who have figured out both.
Interesting. Okay.
And I'm just telling you a pattern I've seen of the thousands of businesses we've been fortunate to work with. Like there is something about a brain. You either have a growth brain or you have a capacity brain. When you try to manage both really well at this stage, it can be very difficult. So again, everybody listening in, like you got to think through that. Am I better at the predictability of sales and marketing, or am I better at the operational retain every client, deliverable of output? Doesn't mean you're not okay at both. But which one are you going to lean into? Like think of it as like are you left-handed or are you right-handed? Like what's your preference? What are you going to lean into? And the reason why I say this is this. Right now, I believe you're closing everything, right? You're closing all the business. You're doing all the sales.
Everything, yes.
In my opinion, until you change that and take on overhead to have sales, I don't care if you're a part of every close. I could care less. It's just until you have more at-bats and you actually have a predictable sales engine, I don't know how you maintain margin.
I would agree with that. To some extent because I can't devote time to bringing more people on if I'm selling at the same time. I definitely understand that.
Well, and it's also that as you're bringing the person on, and it's not even about getting you out of sales. It's actually just you have to get up to a certain level of velocity with the sales engine that you actually get this extreme predictability like you've never seen, where it's like a bad month, I know exactly how much revenue that is. A good month, I know exactly how much revenue that is, and it's never off because there's always an engine of a diversified client base that gets up to a certain speed. So when I think about where Cultivate was, back, 3 years after we started, and it's like, oh, we would ride these waves and it was really hard predictability and our margins would flatline and rise and flatline multiple times versus now we have such a consistent engine of revenue coming in. Often our margin goes like this. But it's because there's so much revenue attribution coming in, it's always ahead of the attrition rate.
Yes. Yeah.
But right now, the size that you're at is awkward. You're like in the teenage years of growth right now, is what I would call it. Right? You look awkward. You're learning how to drive. You know what I mean? Like you're figuring out that speed, right? It's real. Like it doesn't mean you don't have a great business. It doesn't mean you're not providing a most amazing value to your clients. I mean, we're one of them. I know the value you guys offer. It's not about that. Everybody listening in, that's the furthest thing from it. It's actually just the organizational structure that you have established in the business. You have to increase your engine side on the sales side, or you've got to reroute your capacity side. But based on the fact that you're doing the sales, it tells me that you are actually probably more right-handed and you are better at driving the sales and marketing predictability. And I bet if you went back to your cash flow analysis and said, yes, this overhead burden would suck to bring in a business a rep or two to help support this endeavor. Once you overcame it and you solved it, I bet you would see the margin waves would actually shrink.
That's really interesting. I have thought of this, and I've thought about bringing someone on as an SDR to develop some business. And so, is that what you'd recommend, or are you talking about someone who could come in and write proposals and do the?
We're turning now. So if we're getting away from that and we're going to go down this path of like, how do you actually build out this engine, especially in a professional service, B2B space? I'm going to keep it really simple. I'm not going to get in the BDR versus SDR language. I'm not getting into the structure because I would do it probably a little different in every business. But what I will tell you, Rick, is this. It comes down to how many at-bats. If you need somebody to help support you with sales support because you're really good at getting at-bats, you might be able to bring in one person to take away proposal building, sales prep, you might need that. That might be a route you take. as long as you can prove the ROI of I'm going to double the amount of sales conversations I'm having because that space has been removed from my calendar. Generally, I don't care what you call them. I just care you get people at the front end of the spectrum, of the process, of the sales process, where more at bats and more leads are coming in of the right type of leads, no matter what that takes. And sometimes that's also investing in additional vendors, not even investing in people.
Yeah, that's an interesting thought too, because I mean, we do have some services that we outsource because we want to be really, really good at a couple or three things, not necessarily 5 or 6 things that you need to
Yep.
to run a true digital marketing agency. So I feel like we've done quite a bit of work in partner development this year, and that is not only to get referrals from those partners, but also be able to send work to those partners, right? So we would have a revenue share agreement with them and doing it that way and having a good trust and understanding of those businesses so we could refer them, accurately.
Thanks for tuning in to Catapult Your Business, where Cultivate Advisors is helping you catapult your business one question at a time. Are you running your business, or is your business running you? At Cultivate Advisors, they'll match you with an expert advisor and do a free 2-hour deep dive for your business. This will give you the clarity you need on how to get your business to the next level. Cultivate has worked with thousands of businesses. What do you have to lose? So head over to cultivateadvisors.com and sign up for your free 2-hour session.
You could have a partnership director come in and start building up partnerships and have a goal to get 10 referrals in a month. Could be the first month. And it's like, imagine what those 10 new opportunities, and then the partnership would keep being a gift that keeps on giving by having the partners referring you in, right? So, I mean, there's so many, right? You help companies with this. It's always easier to help others. I always say it, right? Like, I can see how to grow your business 10 times faster than I can see how to grow my business. That's just,
Yeah, that's a real thing where you can be a great marketer, but your own business is something real. That, I mean, it's changed, right? So it's changed since I started the business quite a bit.
It's totally changed. But again, back to like the margin allocation and factoring that through growth, there's 2 schools of thought here. Like, do some of those initial tactics I gave you. That's one way. And I would do that no matter what. I just believe in revenue attribution. Everybody tied to revenue. I just believe if you want a growth business, that's what you need to do. That'll help you get a higher multiple when you go to sell, yada, yada, yada. But the second section is also, or do you just need to start to acknowledge that it costs money to go to the next level of scale? And you have to factor that into a cash strategy and where you're going to pull that liquidity or capital from to be able to get through that. And the fastest way I've seen get out of that cycle is to get an established sales team.
Yeah. And, you all have done a really good, Brad specifically has done a really good job with helping us get financially very secure, right? So we do have a rainy day fund we could pull through. We've got that cash stored away, but I've been hesitant to use it until I really understand what to use it for. And I've also heard that if you're going to hire someone in sales, you really need to manage it closely and manage it well. And I don't feel like I'm well suited to manage someone like that. So that's another challenge for me.
Well, again, there are vendors that you can operate with to help you support and do that, right? Brad's got some good sales chops, so that might be a path to go down. But more importantly, Brad is an advisor for everybody listening in, sorry. But more importantly, also, like, it sounds like you might have the next tool that you have to get in your tool belt. If you want to get to that next level and still retain the level of margin, the level of ownership that you want to have in this organization, these are all decisions you have to make. And I'll just, really cool reference point is, and you're starting to feel this, businesses early on have nothing to lose. Every business owner, there's an inflection point where the meter crosses the path, and now you feel like you have something to lose. And I always laugh when I do it too. Like, I'm talking about myself right now, everybody too. Like, you get these, eggs in the basket, or cash in reserves, and you're like, it went down by 20 grand. It's like the smallest amount compared to what you have saved up. But like, I lost that money, and it's you just have to remember that growth is expensive. And so you also have to make a conscious decision of like, why am I trying to get to that next level? Is it worth the cash investment? How long will it take before the margins are returned? And then knowing that, am I willing to sign up for that risk or am I not? And what is my stress test backup plan to retreat? And how will I know when to retreat? And how will I let data tell me when to retreat, not my emotions? Because you'll always get it wrong.
Yeah.
You'll hold off too long. You'll go for it for too long. And if anybody's scaled a business, you know that you have 1 or 2 really good looking babies for 3 to 5 really ugly babies in your business. If you don't know what that means, you will soon. If you're running your own business, that will connect.
That is such a profound statement, Casey, that, you've crossed that threshold where you feel like you have something to lose, because I've definitely crossed that threshold, and I crossed it years ago, and I just need to let loose and maybe make some investments in some areas.
Yeah, but it doesn't also mean you need to throw it away and become this super risk adverse or risk oriented person, right? Like you can still maintain the same way, and just, I think the key is actually understanding what the lever was. And I think what I heard you say coming in was like, the root for me is like knowing when to hire, how to hire. I can find the talent, I can structure all this, I can do these different elements with incentive programs, I can get them selling towards revenue, but I still felt the hesitancy, and that just told me everything. It's like, I think you don't actually know what lever is actually moving, and it's usually predictability of revenue at a completely different level. And I'll even just say, like, I know a little something about your business, like be mindful of your contract terms and expect more from your clients. Because
longer terms.
Generally, if you had a longer predictable line of when you knew revenue and you forced people to actually lock into renewals with you, so you knew you could allocate the revenue, you could then allocate staff appropriately. Because you've given this more flexible, I think flexibility was really neat for a while. And I think a lot of owners have figured out, wait a minute, there is absolutely a cost to flexibility. Right? Amazon can create a lot of flexibility because they were fine losing billions of dollars for so many years before they crossed the profit threshold.
Yeah.
If you don't have that risk tolerance, you may need to shave back some of the flexibility you've provided to your client base and figure out how to still close at the same conversion rate.
Makes sense.
Those are the levers I would actually spend all of my energy on.
That sounds great.
Okay. If you had to pick one thing you grabbed, what's the biggest thing holding out today as you think about how you're going to continue to work on solving this margin during growth period?
Well, it sounds like there's some things that I can do right away, and try to give some incentives for bringing in some new clients. And we actually do have a situation right now where one of our team members is probably bringing in a client, possibly even next week. And so just incentivizing that person for generating that business, showing up, and using that as a huge win and as an example and a rallying cry with the team is probably a good example of that too. That's one thing. And I think the other thing is I've really got to think long and hard about whether it's a growth or capacity business. I mean, there's also a school of thought that says, we can stay the same size and we can charge more for what we do.
That's a capacity business.
Yeah. And it's just greater profitability in that case.
It is. Pros and cons, enterprise value, run the multiples in your business. Look at like if there's a certain revenue threshold where, earning multiples go really high in your business, your industry. Like that's the only caveat I tell people: be careful on the capacity side, because you got to get to a certain size so you open up the pool of buyers to get to the exit you want. Growth side, multiples skyrocket when they see double-digit growth rates year over year. So that's a little easier to prove out. So that's the only thing I always tell people. It's like current profitability, current ease of life, current work-life balance. Run the business with your strengths in mind, but also what do you want out of this thing when you go sell? Make sure that storyline connects. Otherwise, you'll end up in a situation where you go, I think the business is worth more than it was, and it's actually not. And then you don't get the type of exit that you were, always dreaming of. So
absolutely.
There's probably some people in there going like, you know what? I need to get my HubSpot going, or maybe even I want to look at getting HubSpot lined up. Or I just really need to have somebody take a more strategic look at my website, connecting all the campaigns, helping me put out really valuable, intellectual property to ask the right questions that draw people back in, which is what I know your service does so well. If people want to learn more about you, Rick, or learn a little more about your team, or get a chance to meet with you, where's the best place for them to go, so they can meet you and your team?
Well, I post a ton on LinkedIn, so that'll be a great place to start to learn about me and my philosophy, my personal philosophy, but also our business's philosophy on how we do things. But if they'd like to learn more, they can find me at rickwhittington.com, and that's RICKWHITTINGTON.com.
Perfect. Well, we'll get that posted here to the episode so that people can easily find it and click through. Rick, thanks for joining us. Thanks again for letting us be a partner with you on this entrepreneurial journey of yours as you continue to crush it. 40% last year. That's impressive. And, at the end of the day, everybody listening in, remember to keep working towards your journey. Everybody goes at a different pace. There's no right or wrong way. It's about hitting what your freedom point is. It's about hitting what's important to you in the way you run the business. And usually that does include margin, and that does include some level of profit if you want it to survive. So for that reason, Rick, thank you for bringing this question. I'm sure that was on the mind for a lot of folks, and we'll see everybody next time for Catapult Your Business.